All right. Welcome back to another episode of the Real Estate Investing Club, and happy Friday, everybody. I hope you guys are having an absolutely fantastic week, fantastic morning or evening or whatever time it is for you. It is nice and cloudy here in Seattle. It is, we're getting into the end of June, so we should be getting into the sun soon. But yeah, we got clouds. So I hope you guys have sun where you are. It is a good day because we got Ruben Isob with us from WeEnd LLC. They do bridge lending. They have a fund that they lend against 1 to 4 unit multifamily properties. They also do investments themselves. So this will be an interesting episode to go into the lending side of the business. Ruben, thanks for hopping on the show.
Gabe, thanks so much for having me. And you're right. We wear many, many hats, and I'm happy you got my last name right. It's a hard one.
I did have to ask before the podcast, so I had a
But
little
you
bit
did
of a
good.
cheat there.
You did
I
good.
I told you before we got on here, we always like starting with stories and hearing kind of
Sure.
how people got to where they are. It sounds like you have a family business, so why don't you take us to the beginning of your experience and your story in real estate,
Yeah.
and tell us how'd you get started?
Yeah, happy to. So, my family and we immigrated to the U.S. From Turkmenistan in 1994.
Oh wow.
I was only 6 years old. I'm 36 now. I look like I'm 56 though, but it's the salt and pepper that makes me look so good. But nevertheless, I was only 6 years old. We immigrated to the U.S. with very little to our name, living in a one-bedroom apartment, one bathroom with sometimes up to 15 people. So, very, very humble beginnings. Went to the public school system, which I guess served me well to some degree. But I had my, you could say, start in real estate right around 13 or 14 years old. One of my cousins who arrived from Israel actually started buying real estate. So he was door knocking out in Queens, New York, going from one door to the
Wow.
other. And trying to convince people to sell their house, whether it's on the market or off market. And one day he just had this genius idea. He said, you know what, Ruben, you're 13, 14 years old. If you knock on a door, 90% of the time they'll probably open. And he was 100% right. We had a much, much higher door open ratio with me knocking on the door than him being at 30, 40 years old at the time, knocking on the door. So, I had the taste of real estate right around that time. I was able to see what it was like literally from boots on the ground, right? At 13 years old, knocking on doors in some of the, you could say, quote unquote, best parts of Queens, New York. At that time, I think it was Jackson Heights and Elmhurst that we were knocking on doors in. I'm not sure if any of your listeners are from there, but they would know it wasn't the best of times in the I would say early 2000s. But nevertheless, saw how what it's like to be in real estate, the type of money that could be made in real estate, and really never looked back since. I mean, around 18 years old, my brother started buying real estate out in Florida, buying plots of land and developing single unit houses. But fast forward a little bit, I was still in school, doing whatever I can. And luckily for me, I decided to drop out of high school, thinking it was the best decision of my life. For some people, it is. For me, it wasn't. I went into the world of business, thinking I'm going to do amazing. And I did. At some point, I did really, really well. And, the 2008 market, 2007 crash came, right? The great financial crisis, you can say, recession. And my father sat me down, who we lost about 3 years ago. And he
Hmm.
said, Ruben, you're only, I think at that time I was like 18 years old. He said, it's great. I'm here for you. I'm going to pay the rent. You have nothing to worry about. But what if this happens to you when you are, a father, a husband with 3 or 4 kids, and you have nowhere to turn? You're doing well, you're doing amazing, and then boom, kapoots, everything is gone. So he had that real man-to-man conversation with me, and I gave him a man's word at the time, only being 18 years old, that I'm going to go back to school. So I got my GED, and then ultimately went to St. John's University out here in Queens, New York. Got my undergrad, graduated top of my class, and ultimately went to law school. Graduated top of my class in law school as well. Always thinking school was not for me. Turns out it was the complete opposite. I thrived in school. Sometimes kind of wish I can go back to some degree. Maybe one day we'll start teaching classes. But nevertheless, while I am an attorney, I am admitted. I did take the bar, passed it on the first try. Thank God. I did not want to take it ever again. I don't practice because 100% of my day goes towards WeEnd, and that's really where I thrive. And sitting there analyzing contracts and deals that people are buying is not really for me. I'd rather be involved in the deal to some degree.
Yep. Yeah, it sounds like you had quite a colorful start, and it sounds like your dad was a wise man. So getting you back into school, but then ultimately you ended up back in real estate. Once you got your JD,
GED,
once
yeah.
you got
Oh, JD, yeah, that
once you
too.
got your JD, at what point did you get back into real estate? You went out there. I'm sure you practiced law in a while, for a bit,
Yeah.
and then you turned your attention back to real estate. What was the calling that got you back in?
So real estate never stopped.
Mm,
While in St. John's, while in law school, my family and I were still buying, selling, flipping, developing real estate throughout New York, primarily Brooklyn, Bronx, and Queens. So it never really stopped, but it kind of slowed down for me personally. My family kept going, full force. While I was in law school, I kind of had to slow it down. I couldn't
yeah.
focus on both full time. So a little after law school, I decided to work for a cousin of mine who is an attorney and was managing and owning a very, very big and busy real estate law firm. So I was sitting there for about 2 or 3 weeks, reviewing the contracts, making my notes in the contracts. And instead of me really analyzing the contracts and making the notes that I need to do, making the changes that I need to, I was actually analyzing the deals
Yeah.
that the investors were buying. I was like, oh wow, this deal's returning a cash on cash return of X if he executes in this fashion. So did that for about 2.5 weeks. Was talking to my wife, and I'm like, this is just not for me. Law is not for me. Yeah, I dedicated a good part of my life. Came in with about I think 150, $200,000 in student loan debt at the time, but I quickly realized that law is not for me. Now, a lot of my friends and family, they always ask me, Ruben, you're an attorney, you don't practice. Why'd you go to law school? Would you ever go back to law school? And the answer is hell yeah. Although I don't practice, and I know today I don't practice and I won't practice, and maybe I will in the future, you never know. But I would go to law school all over again. And the reason why is because me being a steward of people's money today, a fiduciary to some degree, law school prepares you to look at the downside before you see the upside. And by seeing the downside, you're able to protect the upside.
Yeah.
And I think law school and business has helped me tremendously in that fashion.
Yeah. Yeah. That actually gets, I tend to orient myself towards the downside of a deal more than the upside. And that gets me in problems because I'll get into a deal and then I'll argue myself out of it because all I'm looking at is the downside. But you got to have a balance of both. You have to understand the downside exists and then be confident in the upside. So I mean, having the legal background, I'm sure has helped you tremendously in your career in real estate, specifically because you got into the fund side. So let's talk about your business today. You guys do developments on 1 to 4 unit multifamily, and then you have a fund where you do bridge lending against that asset. Um, what got you into the fund, and then what do you like about the fund model?
Yeah.
Or sorry,
So
the bridge lending model.
yeah. So I mean, we kind of came across bridge lending coincidentally. Right after graduating law school, I just wanted to get out of New York, right? I just wanted to get out of the whole law school grind. So my cousin and I, we decided to go to the West Coast for a private lending conference to also find a cheaper source of liquidity. So not only just to get out of New York, but to find a cheaper source of liquidity for the deals that we were buying, selling, flipping, developing throughout New York. And we went to, at that time, it was called the Pitbull Conference run by Leonard Rosen. Now it's called the NPLA Conference, National Private Lenders Association. I'm actually sitting on the advisory council there today. But we went in there as private investors, private developers, and we walked out as private lenders. We've really never looked back since. Since then, we funded about $600 million across 1,200 loans with an average loan size of about 500,000 nationwide, but really regionally focused, right? I would say the bulk of our business today is in the New York, New Jersey, and Connecticut area, and then some parts of Florida, only because a lot of our New York real estate investors and developers and
Are
borrowers
down in
have been
Florida, yeah.
moving to Florida. Yeah, and some of them are actually moving back, but nevertheless, you always you can't get, you can get the guy out of New York, but you can't get the New York out of the guy, right? So a lot of people started missing New York, but nevertheless, that's really been the birth of WeLend. And WeLend is a bridge lender. We provide short-term financing to real estate investors and speculators. Most of our loans are for a period of 12 months, and most of them are repaid within 8 to 11 months. And the beauty about what we do and what attracted me to the space is the ability to hit high yielding returns while being in a very safe part of the capital stack. And what that really means is that you can hit equity like returns while being the first, well, the last one in to the deal, but the first one out.
Yeah.
So, being a lender before any investor takes out their money in the deal, the lender is always repaid first. I'm sure you own a house, you probably have a mortgage on the property. Before you take out your blood, sweat, and tears out of that home, you got to pay off your bank. And that's who WeLend is. And that's the beauty about being a bridge lender, is being able to hit the equity-like returns while being in the most safest part of the capital stack.
And do you guys only provide first position loans, or have you guys done second position?
No, so we would never do second positions. I mean, look, I personally am invested into the fund. My partners are invested into the fund. My friends and family are invested into the fund. Second positions, while they might be yielding a much higher return than a first position, it's just a little too risky for us. So we only make first lien positions, always collateralized by real estate and personally guaranteed by the borrowers.
Yeah, makes sense. So put on a hat of somebody who has no experience investing in a fund that does bridge lending, and or I guess somebody who has capital that they want to deploy and start their own fund. What are kind of the pitfalls of putting your money out there on in deals, and what are the things that you kind of you generally see go wrong on deals?
I'll tell you right now, I think one of the biggest pitfalls for many new lenders in the space is not really knowing how to underwrite a deal, right?
Yeah,
And that even happens with new real estate investors just
yeah,
making equity, investments. Underwriting a deal is critical, right? And that's where you kind of put on the lawyer hat, you put on the pessimist hat. If you say, I'm the pessimist in the room all the time. I always look at the downside, just probably like you, to protect the upside. And a lot of my partners don't see it that way sometimes. It's just like, you're a pessimist. But nevertheless, you always have to
just
underwrite
don't
the
want to
deal.
lose
And
money, man.
exactly. That's all I'm for is making money, but also not losing money. But underwriting a deal is critical. You got to look at it from every angle. Our underwriting is stringent, right?
Mm,
We actually have a very low rate of approval. We've seen probably over 4,000 loan applications, and we've only funded about 1,200. So we're almost at about a 30%, 25 to 30% approval ratio. And that's mainly because we want to make sure that the deals that we're lending on make sense.
yeah,
Yes, a lot of investors are saying, well, our borrowers are saying, well, we're going to be refinancing through an exit through a, some type of loan, or, we see a value of X and our appraiser, licensed appraisers in that area, see a value of Y. The track of thinking for us is, if you as an investor, as a borrower, are not going to break a profit on this deal, it's a higher likelihood of a default. And we're not a lend to own type of shop. We want to make sure that our borrowers are making money, they're thriving, they're growing. And that's why underwriting is critical. And today we pride
and
ourselves
that's
in the fact that 70% of our borrowers are returning, and there's a reason to it.
yeah, and that's actually that's why I feel your lender is one of your biggest partners in a deal, because if they're not lending on your deal, if they're telling you that your deal isn't good enough to lend on, that is something that you should be listening to, because they have your best interests. Their interests are aligned with your own. They want to see you win. They want to see you make money, because that means that they make money and they don't have to go through the process of taking the property back, figuring out how to dispose of it. So your lenders really should be they should be and are your allies in the deal, which I'm
Totally.
sure, yeah, you take that same perspective. Awesome. So why 1 to 4? You mentioned underwriting is the absolute backbone of lending. You have to understand your underwriting. So it goes to kind of makes sense that you would focus on a specific asset class so you know how to underwrite them. You guys chose
Right.
1 to 4 unit. Why did you choose that?
So we have, most of our asset classes today is 1 to 4 multifamily and mixed use properties. And even on the mixed use properties, we want to see at least 50% residential
Mm,
versus commercial. And the track of thinking for us, well, it's a twofold. 1 to 4 is where we really started lending against. And the reason why is because that's where our background was, right? Most of what we were buying, selling, flipping, developing was 1 to 4 units
mm.
throughout the New York area. So that's the asset that we knew better than any other lender, right? And it helped us really grow and grow very quickly with very, very low default rates and zero principal loss. But nevertheless, we also do provide financing on multifamily and mixed use. And the reason why we like the residential component and we're residentially focused is because people always need a roof over their head, right? For us, capital preservation is critical. While we like to get rich, we also want to stay rich, right? So, capital preservation is crucial for us, and we feel that in residential spaces, it doesn't experience the same market volatility as the commercial spaces, the retail spaces, and so on. And that's why we stay focused on the residential space.
Have you guys ever considered lending on something like a mobile home park, which is, pseudo residential?
It is something that we've been looking into.
Mm,
We are raising more liquidity now. So right now, one of the things that we're doing is like a lot of the money that we're raising is from friends and family, right?
mm.
So that's been going great, but it's a lot of work, right? It's a lot of whining and dining. It's great to have an investor write you a check for 250 to $500,000, but that also kind of limits you because now you have at times liquidity constraints, right? So what do we do in a situation like that, or what is our focus today? Is to raise more institutional capital. So right now we did retain a broker dealer to help us raise $100 million from institutional investors, a single check writer, so that we can actually continue growing our lending platform. Thank God things are moving in the right direction. We have a few groups that we're having advanced conversations with today. So hopefully by the end of the year, we'll have a completely different conversation. And one of the focuses there is to expand on our asset classes that we focus on. So we're probably going to be going more into the commercial side of things, development side. So not only is it going to enable us to expand on our loan programs and asset classes, but also bring down the cost of capital to our borrowers, which will enable us to scale.
Nice. So we are running down the time, but before we move over to the quick question round, I wanted to ask you, before we got on the podcast, you mentioned that it is a misnomer that you need a lot of personal capital to start a lending business, to start a fund. If someone wanted to start a fund from the get-go, how would they do it?
So one, I would definitely suggest to speak to an SEC attorney. There's a few groups out there that we've dealt with. One is the current head of the NPLA conference, John Hornick. He's based out of New Jersey. Great guy, great SEC attorney, knows the private lending space like the back of his hand. I would also recommend to speak to Kevin Kim at Gerasi Law Firm. And again, by the way, this is no way me trying to advertise them. This is who I use, right?
Yeah.
And just kind of giving some piece of advice to the people that want to get into the space. Gerasi Law Firm, they're based out of California. Great group of guys. They've helped us tremendously. So I would say first find the right attorney to kind of give you the guidance that you need. But also, as far as liquidity, it's a misconception. People think that you need an endless amount of cash and liquidity to lend. Now, of course, that would definitely be helpful. Don't get me wrong. But if you have some money that you can personally invest to show your alignment with your future investors, well, then that's really a good start because now you can go out and raise money from friends and family. You would be surprised as to how rich some of your friends are. You wouldn't even know until you have that conversation about potentially investing. You would think that they want to write you a check for 50,000. Meanwhile, they're writing you a check for 500,000. You're like, wait a second, you had all this money all this time, and I had no idea. So you won't know until you try, until you actually put your work out there, and that's exactly what we've done, and we've been super successful in raising from friends and family, and that's why again you don't need that much liquidity.
Nice. Yeah, that's so many people come on here and they mention if you want to raise capital for whatever you want to do. The point is just to have conversations with people. It doesn't have to be a sales conversation. You don't have to say like, "Hey, invest in my fund." You just have to let them know what you're doing, and in that process of letting them know and being top of mind, when they have that money and they want to see a return on that money, they'll come to you.
Totally.
All right. That brings us to the quick question round. You ready to rock?
Let's do it.
Let's do it. Starts with education, could be any form, could be movies, books, whatever. Just give me two recommendations, one for general life wisdom and then one for real estate.
So one thing that I've learned is, having spiritual leaders. After my father passed away about 3 years ago, I started becoming a little bit more involved with my religion. I am Jewish. And, having a good spiritual leader, you would be surprised as to how much knowledge and intellect you can gain from having them in your corner. So I would say, find a good spiritual leader. No doubt about it. I have a few of them and I'm super grateful. Secondly, and again, I mean, going back to education, I'm a high school dropout who realized that, school is important and it's never too late. I spent my 21st birthday in the library of St. John's University in Queens, New York. So, it's never too late. Don't be afraid to pick up a book, but also podcasts. Man, you would be shocked as to how much you can learn. I'm pretty sure that, a lot of some of your listeners were probably thinking about raising a fund or putting a fund together, and now they're going to probably reach out to Kevin at Gerasi or John Hornick out in New Jersey, and they're going to be shocked as to how much they're going to learn. And maybe a year from now, they're going to be one of my competitors, which I always welcome. But nevertheless, you would be shocked as to how much you can learn on YouTube, on different podcasts, because there's a lot of guys out there that just want to help the people out there and give back.
Nice. All right, next question is for your younger self. Let's go back to the Ruben who was just doing that first door knock way back in the day, 13-year-old Ruben. Go back to him, look him in the eye, give him one piece of advice moving forward.
Don't get discouraged. Keep rocking, keep rolling. Look, although I was only 13 years old, there were some doors that were still slammed on me, right on my face. And I was 13 years old saying, why is this person being so rude? I remember my first job ever. I was probably 11 years old, 10 or 11 years old. I was a dishwasher. I was a dishwasher for about maybe 45 minutes. Hence the reason why I never wash dishes at home, not because I don't want to, but because I am just scarred from washing dishes. Shout out to my wife, who is just always on top of it. God bless her. I love you, baby. But nevertheless, I got fired from my first job at 10 or 11 years old washing dishes. And I came out there super discouraged. And I came up to my brother and I said, I can't believe I got fired within 45 minutes. And he said, you know what, Ruben, not every job is for you. You got to find your niche. So I would always say, find your niche, rock and roll it, focus, and just keep grinding away.
There you go. All right, next question is about the US. It is a big place. There is tons of opportunity out there. Give me the single metro you're most excited about investing in today.
So look, we're very invested in the Brooklyn area today, right? So New York is our backyard, our footprint, but we know it really, really well. But it's still very, very difficult to navigate, right? It's a blue state, as they say, and I'm not trying to become political in any capacity, but it is a blue state, which makes things very difficult for investors like myself who just want to revitalize neighborhoods, who want to grow the neighborhood, who want to help some of the tenants that are having difficulty in some of the leaking and physically disabling properties. You want to be able to help them, but it's hard to invest into them, knowing that you can't really try to return the money that you've put into it. So I want to say that while we are focused in New York and it is a blue state, I would say focus on the red states. They're a lot more investor friendly. They're a lot better capitalized as a state itself. And that's mainly because they are investor friendly.
Yeah, I really like Texas, although their property taxes are like the same as New York. It's ridiculous. I don't know why their property taxes are so high, but otherwise,
well, no
I like
state income
Texas.
tax, no
Yeah,
no
there
state
you
income
go.
tax.
There you go.
So definitely helps.
All right. Next question is about finding deals, or I guess we can say finding deals or new GPs or operators who you can invest with.
Yeah.
It all starts with getting in contact with them. So, what is your favorite way to generate leads and find new deals or partners?
People have to know what you do, right? There's a lot of people, in a lot of businesses. I know a lot of friends that I still to this day don't know what they do, and they just try to keep it on the hush. Maybe that works for them, but me, everyone in my circle, everyone in my world knows exactly who I am. They know me as the WeEnd guy if they don't know my name. but they know exactly what I do. And the reason to that is because we are very big on social media and we share exactly what we do, and we're always willing to give an open hand, right? So I think that the best way to find, whether it's real estate deals, whether it's GPs or just clients in general, is social media. You would be shocked as to how many people are out there. And also podcasts, right? This podcast, I'm pretty sure, will yield some type of return for you and for me, right? And that's mainly because we're out there putting ourselves out in the world.
Yep. Yeah. For, it does, you do have to have an inclination to want to, talk to people every day. But if you like doing that, I always suggest starting a podcast if you're an investor, because one, you get to learn from people who are doing things that you're not doing, like Ruben. I'm learning every day. I'm learning from Ruben. I'm learning from the guests on my show. And then two, you have this source of content that you can just put out there and let people know what you're doing. And so it's a great way. I always suggest start a podcast if you want to start a podcast, or be guests on podcasts. It's another way to do it. So,
Totally.
all right. Brings us to the second to last question. This is about deals gone sideways, or rather lessons learned. Not every deal goes the way that we expect it. A lot of times a wrench is thrown into the mix and we get to learn a lesson. So what is a deal that went a little sideways for you? And then what was the lesson you pulled from it?
I'll tell you right now, one of the deals that kind of led me into the private lending space. We bought one family out in the Bronx many years ago. This was in probably 2015. And I think one of the things that I did not appreciate is the size of the property, right? It was only 2 bedrooms above. I thought that I was able to sell the property for a lot larger or greater value than I actually did. But at that moment, I did end up losing about $40,000 on this deal. And I had a friend of mine who was getting married at the time who actually invested with me. Of course, I didn't let him lose the money. I just redeemed him his full amount without having him lose a penny, because again, newly married guy, don't want him to start his marriage off that way. But I think one of the biggest lessons for me at that moment is that, I've put in all this hard work, all this time into this deal. I went back and forth to the Bronx from Queens, and there's a toll going both ways every single time, every single day. I spent so much money. I lost $40,000, but the only person that didn't lose money on that deal was my hard money lender. And, I came out to him and I said, hey, do me a favor, give me some kind of break here, reduce the payoff or something to that effect. And, he was like a mobster. He's not, obviously, but he was like a mobster, like, F you, pay me, right? Type of scenario. Your restaurant burnt down, F you, pay me. It was unfortunate, but I came out of there with a lesson. The fact that, you can be an equity investor. You can think that, things are great. And most of the time they are. Out of 100 deals, we've only lost money on 2 deals. But there are times where you do take a loss. But the only group that will unlikely take a loss is the lender on it. And that's what really attracted us to the space.
Yeah, makes sense. All right, that leads us to the very last question. This is for the listeners. I'm sure people want to reach out, get in contact with you. This is a 2-parter. Where can they find you? And then what can they expect when they reach out?
So definitely visit our website, www.WeEnd LLC.com. A wealth of information there about what we do, who we are, and how we operate, and how to invest as well. And then you could also visit us on any social media platform. Our handle is WeEnd LLC. We have a wealth of information there as to what we do, how we do it, and how you can invest and earn a good yield on your money.
Perfect. I will put those links in the show notes. So if y'all want to reach out, just click the little more in the description. It'll pull down that full description, and in there you can find Ruben's links. All right, man. That wraps it up. Thank you very much for hopping on the show.
Thank you, Gabe. It was a pleasure.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you want to support the show, just give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.